Exchange-traded funds can be a great way to save for the long term, for your retirement. Exchange-traded funds, or ETFs, are similar to mutual funds in that they typically hold a basket of stocks or bonds. ETFs tend to also track a common benchmark or index like the S&P 500 or the Dow Jones Industrial Average. But they're also quite different than mutual funds. First of all, they can be traded throughout the day like a stock, but more importantly, they tend to hold lower expense ratios than mutual funds, even index-based mutual funds. ETFs can really enhance 401k plans, and there's a couple big ways they do it. First of all, it's that low expense advantage. Historically, over time, the less money you pay towards investments and fund expenses, the better those funds have done over time, the more money you have at retirement. So low expense funds tend to beat high expense funds. The second way is they offer great diversification, and you'll often find them in areas you don't typically see in 401k plans that can really help you manage different economic times. You might think of commodities or gold as a place that might offer some value to in investing. You might think of inflation-protected securities to protect yourself against inflation. These are great asset classes that ETFs can provide you at very low expenses. So they offer that different ways for you to manage your money through time. Exchange-traded funds have become very popular among different advisors and investors in the retail space, and are now, with pioneers such as ShareBuilder 401k, becoming much more popular in 401k plans. There's a couple things driving that. First of all, the industry has typically been compensated from mutual funds and insurance-based products through fees passed back through those funds. The great thing about ETFs is they're transparent and those fees don't exist. The second thing that's going on is with fee disclosure regulations. Now, employers and employees are provided with what they're paying. And as people know, the more you're paying in your investments, it's the less money that's in the market. With those two things coming together, you can see why ETFs are really starting to take off in 401k plans. Transparency, low expenses, and great diversification. It's a better way to manage your money.